Good morning, investors. You are now on CleverStock with me, Ainunjaria, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. Bursa Malaysia opened higher today, mirroring Wall Street's overnight rally after the latest U.S. Consumer Price Index figure came in slightly below expectations, thus paving the way for a possible Federal Reserve rate cut next month. The U.S. recorded a softer inflation rate of 2.7% in July, below consensus estimates for a headline CPI at 2.8% and core CPI at 3% for July. At 9:17 a.m., the FPM KLCI rose 2.30 points or 0.15% to 1,570.20 from yesterday's close of 1,567.90. The benchmark index had earlier opened 1.17 points firmer at 1,569.07. Market breadth was positive, with advancers leading gainers 286 to 107. A total of 269 counters were unchanged, 1,860 untraded, and 18 suspended. A turnover stood at 298.39 million shares worth 112.24 million ringgit. We should now look at the performance of our local currency. The ringgit extended its uptrend against US dollar on Wednesday, supported by a 0.43% drop in the US dollar index DXY to 98.097 after the headline US inflation rate came in lower than expected. At 8 a.m., the local note rose to 4.2115 or 4.2285 against the greenback from Tuesday's close of 4.2290 or 4.2320. Bank Malaysia Berhad Chief Economist Dr. Muhammad Afzanizam Abdul Rashid said the ringgit is likely to be well supported today, with the US dollar ringgit USD MYR expected to trade between 4 ringgit and 20 cents and 4 ringgit and 23 cents amid a high probability of a US interest rate cut. He noted that the softer US inflation rate of 2.7% in July was largely driven by a moderation in the owner's equivalent rent OER to 4.1% after holding at 4.2% for 2 straight months. OER accounts for about 25% of the Consumer Price Index CPI weightage. He said the U.S. benchmark equity indices rose more than 1%, while the yield on the 2-year U.S. Treasury note fell by 4 basis points to 3.7%.
The awards and loyal customers are a testament to our excellence. With decades of experience, we've built a solid foundation. Our strong management ensures your business is in good hands. Our advanced warehouse system guarantees accurate and speedy order fulfillment. Our 24 to 48-hour delivery keeps your business running smoothly. No matter where your office is, we're there. Our nationwide delivery ensures you never run out. Pacific Office, more than just supplies. We're your productivity partners. With speed, selection, and service, we're fueling your office's success. Choose Pacific Office. Choose efficiency. Choose growth.
大家好，我是 Kimi Lau Academy 环的美有限公司的总执行长。教育是全民身心修养和实践社会发展的重要基础，也是每一位父母一生中最值得投资的事情。我承认，我很注重孩子的学习成果，不过我更希望他们开心的学习，快乐的成长。我成立 Academy 环的美的初心，就是希望能看见每一位 Academy 的老师和孩子们都能开。
He said this suggests that the lower than expected headline inflation has strengthened expectations for a U.S. rate cut, fueling the rally in the equities market. At the opening, the ringgit, however, traded mostly lower against major currencies. It fell versus the Japanese yen to 2.8502 or 2.8619 from Tuesday's close of 2.8490 or 2.8512 and declined against the euro to 4.9182 or 4.9380. But against the British pound, the local note appreciated to 5.6876 or 5.7106. The ringgit trended higher against regional peers. It advanced against the Singapore dollar to 3.2825 or 3.2960 and strengthened versus the Thai baht to 12.9965 or 13.0570. The local note also appreciated versus the Indonesian rupiah to 258.5 or 259.6 and rose vis-a-vis the Philippine peso to 7.38 or 7.41. Moving on to economic updates. Malaysia's debt capital market DCM issuance is expected to moderate further in the second half of 2025 as the government presses ahead with efforts to reduce federal debt. Fitch Ratings said the moderation stems from the country's fiscal plan, with the budget deficit on track to meet the 3.8% of gross domestic product target for 2025. However, it noted that the substantial corporate debt maturities and rising bank funding needs could drive a rebound in issuance, supporting overall DCM activity. The first overnight policy rate cut in 5 years, lowering the rate to 2.75% in July 2025, may boost non-sovereign issuance further. Fitch Ratings currently rates $14.8 billion worth of Malaysian sukuk, all of which hold investment-grade ratings with issuers on stable outlooks. As of the first half of 2025, local DCM stood at $580 billion in outstanding value, 92% denominated in ringgit. Sovereign issuers accounted for 60%, while sukuk made up 59% of the total. Fitch said total DCM issuance fell 27% year-on-year to $41.1 billion in the first half of 2025, with the sovereign share almost halving to 36%. While sovereign issuance dropped 63% compared to the previous year, bank and corporate issuance climbed 65%. The agency noted that DCM growth could face headwinds from factors such as ringgit volatility, interest rate shifts, commodity price swings, U.S. tariff actions, and global geopolitical tensions. Fitch Ratings Global Head of Islamic Finance Bashar Al-Natur said Malaysia remains the world's leader in outstanding sukuk volumes, with one of the most advanced DCMs among emerging markets and the third largest in ASEAN. Domestic investors remain diverse and hold most of the DCM. However, foreign investors' appetite is rising, with a ringgit DCM share of nearly 14% and is mainly through government bonds. Foreign holdings of sukuk are still lower than bonds, partly due to GCC Islamic Bank Sharia compliance requirements and limited hedging and repo options. And now moving on to business news updates. CARLSBERG's brewery Malaysia Berhad recorded a 3.1% increase in net profit to 81.9 million ringgit for the second quarter ended June 30, 2025, compared with 79.4 million ringgit in the same period last year. Revenue fell 3.4% to 490.1 million ringgit from 507.5 million ringgit, partly due to a lower base in the corresponding quarter last year, which had been boosted by trade purchases in March ahead of the price hike. Profit from operations slipped 2.3% to 95.2 million ringgit, CARLSBERG Malaysia said today. The brewer declared a second interim dividend of 20 cents per share for the quarter, bringing total interim dividends for financial year 2025 to 43 cents per share. For the first half of 2025, its net profit rose 5.4% to 176.5 million ringgit from 167.3 million ringgit in the same period of 2024. This is mainly due to the absence of additional deferred tax liabilities from foreign withholding tax in its Sri Lankan associate Lion Brewery Ceylon PLC, which was recognized in the first half of last year. The group will continue its efforts to navigate the challenging macroeconomic environment marked by external headwinds and increased uncertainty that may result in prolonged soft consumer sentiment. The group is optimistic that recent government measures, including fuel subsidy rationalization, electricity tariff adjustment, interest rate cuts, and targeted cash aid, will help lift consumer confidence. To navigate the challenges, Carlsberg said it will prioritize cost optimization to fund initiatives in brand premiumization, product innovation, and digital transformation, while staying committed to delivering sustainable value to shareholders and stakeholders. He said, our continuous focus on our disciplined discount management and also operational efficiency demonstrates the resilience of our business strategy amid challenging and subdued local market, giving us the confidence to keep investing behind our brands. This was said by Carlsberg Malaysia Managing Director Stefano Clini. And finally, wrapping up, we have major corporate developments and deals across Malaysia. MGB Berhad secured a 185.99 million ringgit contract from CI Medini Sunjam Berhad for the development of 2 service apartment towers in Medini Skandar Puteri, Johor Bahru. YTL Power International Berhad launched Ilmu, Malaysia's first fully homegrown large language model, via its unit YTL Al Labs Sunjam Berhad, EI Labs Sunjam Berhad. CLASSITA Holdings Berhad said its subsidiary KLM Sunjam Berhad have sued Koperasi Peserta Felcra Malaysia Berhad to recover 9.47 million ringgit in unpaid sums for a completed 69.04 million ringgit housing project in Perak. NationGate Holdings Berhad saw the Employees Provident Fund EPF reduce its shareholding below the 5% threshold after disposing of 3.75 million share on August 2025, leaving it with a 4.909% stake. And finally, THONG GUAN Industries Berhad announced that Raja Muda of Kedah Tengku Sarafuddin Badlishah Sultan Salehuddin has resigned as independent and non-executive chairman effective 25 August 2025 after completing his 9-year tenure. And that's a wrap for more debate updates with me, Anujaria, on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live coming soon.